I'm sure you're all fed up of hearing people say that there's a wonderful opportunity in the sector at the moment. And maybe back in February, March time, when the sector was at the bottom and everyone was really desperate, and we suddenly saw a leap in the value of the Huey Gold Bugs Index. Gold started to move, silver was moving, everything felt great. We made a bit of money. Metal Tiger were fortunate enough to be involved in Botswana and find some really interesting data from their exploration work in Botswana. Our share price went up a lot. Many companies rose in value. We were all excited, and then wham, bam, thank you, ma'am. 6 weeks ago, all the steam kind of goes out of the sector and we go through another retrenchment. Kind of reminds me of 2010, when Malcolm said I had to be honest. And I have an interesting kind of story from 2008-9. Marriage was failing, life was a bit miserable, had no money, down to my last kind of little pot. And in December 2008, I sat down between Christmas and New Year to work out what was the best place to invest the money. And I came to the conclusion that natural resources was the place to be. And I analysed all 170 stocks, I think, on the market at the time, mainly AIM, and chose, based on 8 factors, the stocks to invest in. And in the very early days, it was things like Amur Minerals, big nickel sulfide projects in Russia. You could buy the entire company for about 70% of the price of a 3-bed semi-detached in Staines. £250,000 was the market cap, and it was just a sitter. So I bought some shares at 0.18 pence, and in a flash they went up in 5 trading days to 1.2. And I sold them and made a bit of money. I put, I think, I don't know, about £800 in, and suddenly had about £5,000 at the end of the process. And then I put some money into Zeehan Zinc. I don't know if anyone remembers that one. I do. Because 10:30 one morning back in about second week of January 2009, the share price started to move from my entry price, I think about 0.32, 33, 34, 35, that kind of level. And I sold them at 2.32 3 trading days later. And suddenly a little pot of money had gone. I started with about £7,500 in very early January 2009. And within 3 months it was about £30,000. And that was quite nice. So I moved out of the family home, went to live in a little bedsit, all by myself, nothing but me and the stocks, and Bertie the teddy bear. We don't talk about Bertie very much. My wife is coming this evening as well, so I have to behave myself when she walks through the door. She's not here yet. Anyway, I carried on. So I identified a few other stocks. Goldstone Resources at the time was sloshing around at next to nothing. I had a little dabble at some tiny bio companies, pharma companies, biotech, and made some money off those as well, like Summit Pharmaceutical and that kind of thing. Really, really tiny companies. My preference was always for tiny market caps. You see, I felt it's easier to go from £1 million to 10 million quid as a market cap than it is to go from 10 to 100. So just bought in and kind of waited. And then when they spiked, I sold out. Now, I got to May 2010, and I've been paying the mortgage on the former marital home and all of my expenses and everything else out of my capital gains. And by May 2010, early May, the portfolio was about £250,000. It was okay. Not bad. I felt reasonably comfortable. And then blow me down, I think it was the 24th of May 2010, the market crashed, and we had about a month of falling prices, and the portfolio fell to about 125,000. So naturally I started to kind of wet myself a little bit and think the obvious investment thought processes of selling and selling and selling. But for some reason I didn't. I went on holiday to Tenerife, and that was nice because it was hot and I kind of forgot about things. But I held on. And then in the summertime, I came across Casa, if anyone remembers that. I bought lots of shares in Casa. They went up 6 times. Bought lots of shares in Thor Mining, blimey. They went up 7 times. I bought Condor. Remember Condor? Yeah, I was piling in on Condor like crazy with gay abandon, and they went up from 0.5 to 3.5, and I sold them out at an average of 2.3 and thought, oh blimey, I made a mistake, and bought half of them back, and then they went to 10 pence. So I was dropping 6-figure gains on everything, and long story told, after paying off the mortgage and sorting out the divorce and doing all the other things you have to do, all told, the portfolio went to about £2.3 million, and it took me 2 years to do it. And naturally, with life expenses and all the rest, and holding on too long, I didn't sell right at the top, and I lost a fair proportion on the way down the other side. But I've always hung on to that feeling of what it was like right at the start. And it's really tough because 2 things happen. At the bottom of a market, everyone is negative and everyone is critical. And it doesn't matter what you do and what you say. If you invest in this sector, the resource sector at the bottom, people think you're foolish and people criticize you for what you do. When you sell at the top, people say that you're a lucky bastard. And there's no in between. And the only thing you've got is a belief that if you buy the resource sector at the lows, and then you hold with patience and wait for the market to re-rate, you won't always get it right. You'll make quite a few mistakes along the way, but you stand a pretty decent chance of making a rather large amount of money. Like the 3 million Red Rock, Mr. Bell, wherever you are, there you are, that I bought at 0.5 of a penny and sold for a 20 times gain. Thank you to Andrew for paying off my mortgage. And I remember the day when I went into the Nationwide Building Society with a final cheque for £62,833.17. And the lady said to me, oh, you don't have a mortgage anymore. And I said, no, well, it's not that good a story. She said, but you must feel wonderful. I said, I don't, because I'm about to go to the solicitor and sign the house over to my wife as part of the divorce settlement. And she said, well, with your changing financial circumstances, would you like to speak to one of our advisors? And it probably would have been a good thing at that time, because I might have sold a lot more than I did. But the potential is there. Now the trick, because I'm almost out of time and Malcolm's getting edgy, he will move towards me in a nervous manner soon. He asked me to tell you why we invested in Red Rock and why we invested in Greatland Gold. And it's very simple. At the bottom of the market, there are a number of stocks that, for a variety of reasons, have the potential to move considerably. The most obvious factor is that people hate the management team. And without a shadow of a doubt, if you look at the discussion boards over the years, they really hate Andrew. And he suffers so much abuse, and I have to keep blocking people on Twitter who slander him and cause all sorts of nasty things to be said about him. It's lessened recently, in fairness, but they keep changing their names and coming on with new names and attacking and attacking and attacking, and it's a wonderful contrarian buy signal. People like Andrew have a drive and determination. If I communicate with him before I was working with him, at any time of day or night, he will respond with a text message. I can say, are you free for a chat tomorrow morning at 11:30 at night, and he'll ring me back. He works exceptionally hard, very committed person, has the flair, talent and capability to deliver in a recovery market. In fairness, I wouldn't particularly back Andrew in a declining market in the resources space. But I wouldn't back me either, because we're probably both similar creatures in the sense that we know how to move companies into a recovery phase, build assets, grow businesses and grow market caps. But on the other side, one thing we have to learn, both of us, and I think he would agree with me, is we have to learn how to exit properly, and that's what we're focused on now, making sure we exit out of things and deliver value to shareholders rather than running through the entire cycles. Now, the second major factor is opportunity within companies. Greatland Gold's asset base is exceptionally strong. The opportunities within it are superb. The fact that the market does not recognise that at any point in time is just the market. And we recognised, whilst with Andrew, we felt that it was something we had to back because he has the knowledge, capability, experience and drive to deliver in a recovery resource market. With Greatland, the asset portfolio that Callum's built over the years is exceptionally strong. Now, it may not deliver anything because that's exploration and that's the risk that you take. But when you have a good mix of precious and base metal assets in a safe jurisdiction with a management team that have been working there for quite some time and know their business, when you speak to Callum, Callum is not the most exciting man in the world, okay? In fairness, he's quiet, he's determined, he's focused, a very, very capable technical deliverer who I believe will deliver for shareholders in the best possible way. Now, he may find nothing in these licenses, that's the risk. But there's a decent chance that he might find something, and the prospects that are within the portfolio are significantly attractive for me as an investor, both from a personal perspective. I keep buying shares and annoying Sean because we're issuing RNSs on director purchases, and also from a corporate perspective because I think we stand a chance to make a lot of money for shareholders. So the two main factors for me are the management team, their capability, and secondly, the opportunities that the companies have to offer. You have to ride a storm, 30 seconds, ride a storm in this business of abuse at every stage of the process. At the bottom, you're a fool. At the top, you're a lucky. You have to take that out of the film. But if you can ride that storm, if you diversify, don't put your eggs in one basket. The passion investors feel for an individual share is quite intense. I know I've had that myself over the years. Split yourself across different countries, different commodities, different sectors. Don't throw everything in. There's a reason for that. It's because you'll make more money. When you feel under pressure with an investment, you have too much in it. You're nervous, you're scared, you make the wrong decisions. Always have a bit of cash at the bank. Don't invest everything. Spread yourself around a little bit. Then you'll never feel the nervous tension that will drive you to make a bad decision. And you protect yourself as well. Because the number one feature for this game, as I learned in 2008, almost on my knees, with regard to my investing, having lost about 90-something% of my portfolio value at the time, was that you have to stay in the game. Protect your capital. And you don't have to invest all your capital to make the maximum returns. Keep some to one side, spread your risk, and protect yourself at all times. I believe the next two companies offer a tremendous opportunity. I'm director of one. Sean is looking at me again. I've got to be careful what I say, but I'm very passionate about Greatland. I think it's a great opportunity. My family has a lot of money. My wife was buying shares today. In the company, we own 89 million shares, and we have some options and some warrants. If it works, it will make me a lot of money. If it doesn't, we'll lose a lot, so we're quite focused. Red Rock Resources gives everyone a great opportunity. Look at the last time, the last cycle, the stock went up 80 times. Now, I don't know if it's going to go up at 80 times, 20 times, or go down 50% in the next 2 or 3 years, but I would wager that it's going to go up. Thank you.